Hello and welcome to another update video about Bitcoin. Not moving a lot. The overall crypto market is rather moving sideways, a little bit up and down. Monday, obviously, US markets closed, long bank holiday weekend in the US, therefore probably a quiet day today. Looking at Bitcoin, we want to start with a higher level wave count. My view is still that we came up here in a wave 1 into April 21. This is an impulsive wave, which means it goes into the direction of the higher level trend. Without much surprise, it was the all-time high. This is an Elliott Wave count, which was then corrected by a wave 2. Also without much surprise that we got into this area where we currently are. It was corrected with an A wave, a B wave, and a C wave. This wave B is an overshooting wave B, and this was complete. No need to talk about this in detail. Other interpretations are possible. For me, this is the one that adheres most to the Elliott Wave principles, and therefore I'm going to go with this, and this has not changed since November 2021. So when we dropped down here in this C wave of the wave 2, I believe when we reached around 55k, I told you that now we have to go below the 28.6k level, which was here the low of the wave A. This was just the most likely scenario, because here if you have an overshooting wave B, which is rare, this is normally followed by a wave C that goes below the low of the wave A. And the clear reason for that is that it has to be an expanded flat pattern, because a running flat, which a lot of people expected, so a lot of people were very bullish here, for example, and here, they expected a so-called running flat pattern where you don't need to make that lower low. But as I always told you throughout this whole move, a running flat is the most unlikely pattern pretty much that you can get. So it was extremely unlikely, and here probabilities were on our side. And we moved down further here, and we got into my target area below 28.6k. We briefly dropped below 20k, we're still below 20k at the moment. This was sort of my initial target area between 20 and 28.6k that I formulated in November, early December. And overall, as I said, we came down in a 5-wave move here. Or throughout this whole period, I told you we have to go lower until we broke that 28.6k level here 7 months ago after the initial call. And this was the first time that I told you that every low can now be the last one. That is what we need to understand. Every low can now be the last one. Of course, it means we could still drop lower. But for that, we take a look here at the lower level wave count. And so far, we can make the call that this could really be the first time in those 7 months that we have found support and the low is in, and that we go up from here. This is not a must. Few things need to happen for that, and we go and take a look at that. But also here, throughout this whole period, I told you that a move up from here would be very unlikely. And we came down once more lower, and now we are in this region, and you could call it a bear flag, absolutely. And I'm telling you, we can still make a lower low, but now it's getting increasingly less likely that we have to come lower, because we don't have to come lower anymore. Okay, we don't have to come lower anymore. Here, we still had to come lower, because this structure that developed here was just no base for new all-time highs. From an Elliott Wave point of view, it just wasn't. It was a corrective wave pattern. I told you here very clearly we have to make another lower low, and we did. We came down lower, and here is now that we can, for the first time, really count an impulse to the upside. Plus, we have completed the 5 waves down. We can count this as complete. From that point of view, it increases the likelihood that we go up from here. However, from my point of view, the likelihood to go down even lower is still higher, because we have not yet broken key levels. Because what do you need to see to get confirmation that the low is in? First of all, we want to see it in the Elliott Wave pattern. We want to see the price structure. We need to see a 5-wave move up and a 3-wave move down. Now you can see here we made a first wave up and a second wave down. This is how it's currently looking like. From here, we would now need a wave 3 to the upside, a 4 down, and a 5 up. Few people have asked me, well, you have 5 waves here already and you're coming down in 3 waves. Could this not be already enough indication that the low is in? Well, I told you a few things need to happen. We need to see that 5 wave up, 3 wave down structure. We can see that we can count this move from the low at 17,500 to the wave 1 high as impulsive, and we can count this as a 3 wave move down at the moment. So the likelihood is, the possibility is, yes, the low could be in, but it is not only that. We have seen this really only here on the 4 hour or the 1 hour chart, this impulsive move. So obviously the higher level the impulse is, the better. So to explain that, what you want to see ideally is here a 1, a 2, a 3, a 4 and a 5. So to have a higher level impulse and then come down in 3 waves, and that would be a good indication, because this move up in 5 waves would then also cut through those structural resistance levels. So this is the second point that really needs to be done in order to be more confident that the low is in. From the beginning, from when we made that low, I told you that we need to break this resistance area here between 23k and 23.3k for me to consider more with a higher likelihood that the low is in. Until we break that level, it is very, very likely that we still come lower and make a lower low below 17,500. And the other thing that needs to happen is the volume. Now we have to see that volume is increasing. So if you have a strong move up like this, it needs to be followed by volume. Volume is increasing. You can see that here, more volume, more volume. So we see increased volume. So I'm personally happy with that, especially if you compare the volume that we had here since June. Compare that to the beginning of 2022. There is not much there. So volume has increased. So that is there. We see a first 5 wave move up and a 3 wave move down, but we need to break through these resistance levels. That is the price confirmation that we need to see. And these are the things that need to happen. So if we zoom in a little bit here from a bullish point of view, yes, impulse up, corrective move down, fine. We've reached important support levels. And I understand it can be frustrating because at the moment, both scenarios are possible. On this channel, I think you are, you're used to straight calls. For example, for the last 7 months, I've been telling you we have to go lower. There is no way around it until we go below 28.6k, and then we have to be on high alert that the low could be in and we turn around. And this is exactly what we're doing now, investigating that potential. For now, though, we're not seeing enough. And in the last video, I called out here this important support level, the 61.8% FIB level. We're still holding that. But we could even drop a bit lower here to the 78.6. And as I said to you, if we go below that 78.6% FIB level here, below 18.46k, then it is just getting very unlikely that this still is a wave 2 here. Because then we, first of all, take out that swing low, and then we break below a very important support level, that 78.6% FIB level. Then I think with a very high likelihood, we're going to see that 17.5k level broken as well. So for now, if this is supposed to be something more bullish, we have to see something now. We have to take those swing highs out. First of all, 19.4k, then here 20k pretty much, this swing high, and then we need to go through this one between 21.36 and 21.7k. Very important level. Above this, there is not much resistance there until we reach the 23k level to 23.3. And if we take that out, then we can, and substantially, which means we retest it from above, then we can be more certain that we have to deal here with a more sustainable and more likely breakout. Until then, we have to pretty much still be aware that we at any point could make a lower low. And of course, this whole impulse will be invalidated below $17,500, which means that impulsive wave structure can be taken out, and only the corrective one will then be live, which is this one here. The corrective wave structure where we came down in a 3, we moved up in a 4, we're moving down in a 5. This here then we have not yet seen the 5th wave in this scenario, and that 5th wave could see several levels, but one very, very important level that is on the chart is that 16.9k level. That is the very large 78.6% FIB level on the Bitcoin chart, a structurally very, very, very important level. So don't underestimate that level. If we break below 17.5k, it could be we're not dropping too much and we find support at 16.9k honestly, the 78.6% fib level, very, very important support. But if we go below that, next key Fibonacci support would be that 10.6K level. That is the 88.7% fib level. Going to that level for me is happening only in extreme case for Bitcoin. And I would be super surprised if we go below that level. Yeah, if we go below the 88.7% fib level. But all of that, making a lower low and so on, and going even down to 10.6K would all still be covered by my higher level Elliott Wave count scenario, where we are here in a higher level wave 2, because the wave 2 can go down without much problems all the way down to the 88.7% fib level. Not a problem. All it needs to do, it needs to hold above 4K, which is the COVID low. But if it goes down to that level, it would not be good for Bitcoin. So it should turn around before we reach the 10.6K level. So unfortunately, at the moment, a lot of uncertainty in the markets. But we know which levels to watch out for to determine which scenario gets more likely. We are currently stuck in between two scenarios. The key support and resistance levels are known. I already called them all out in the previous video. And yeah, to get further confirmation that we are doing and operating here on a bullish breakout, we need to take these key structural resistance levels out, and we need to see the impulsive waves to the upside on the chart. At the moment, this could all still be corrective, yeah, and there is just uncertainty in the markets. That is just what it is, and we need to operate just by sight, yeah. Whatever happens, we then have to take it further, because we are now in a possible trend reversal space. It is a little bit like when we were up here. Remember that? Yeah, when we were making the new all-time high for Bitcoin. And of course, you know, when we started to move down from here, yeah, to 65K from the peak, you know, nobody could tell you, you know, this is it. You know, we're going down now. No, nobody. You need to wait for price confirmation. Even here, we had to wait for price confirmation. I believe it was when we took out that swing low. That also broke a key Elliott Wave pattern. And from here, I told you, we are going to rush down into the area below 28.6K. So there is always an element. Yeah. I mean, this was here 15 to 20% that was, yeah, that we had to wait until we got price confirmation, that I could make that call and be so determined. Exactly here now, of course, I can't tell you here in this range that we are definitely going up. We need to wait for price confirmation. Maybe we need to wait for those here 20% again until we break that 23.3K level. Just makes sense. So for now, it could also be, and that is a very important thing that you need to know. It could be that here in this range that we're going to operate here for a while, because markets do always correct either by price, which we've seen very strongly. We've come down by price, but a lot of people talk about the crypto winter, and it could be that we have to have some sideways movement before we make that last low, for example, or before we start to go up. If the low isn't in yet, it could be that we have very, very long sideways movement, which then corrects the price, not correcting by the time, not correcting by the price, but correcting by the time, with time, and that could help that monthly MACD to come down lower. I've raised my concerns already about the monthly MACD last year. This is coming down now, yeah, and I'm getting quite happy about that. We are coming down with this monthly MACD, so give it maybe another couple of months and it will come down lower. And this is good. Yeah, this is good. The monthly MACD needs to come down, because otherwise sustainable all-time highs will only be will be difficult to achieve, right? So yeah, we're getting into interesting into an interesting range now, because, you know, when we were still up here, I raised my concerns that even though we were coming down with the price, the monthly MACD still had a long way to go, and we finally see it come down lower. So that is really good. So yeah, this was always the only thing that annoyed me on the chart. You know, we reached my price targets and everything, but the monthly MACD was still a bit too high. So you need to imagine when we turn around, for example, we would have turned around up here, the MACD can only go up so much. So this would have naturally prevented the price from going up too high. So it's actually good. Yeah, it's actually looking good. All right, and that is currently my view about Bitcoin. Unfortunately, no new price news here. pretty much only operating sideways today, as you can see here, a little bit in a triangle pattern from that is what I told you, I think, earlier today. This could become a triangle, looking a bit like that. And again, if you draw that on your chart, you get a little bit of a breakout pattern here. And any breakout either way could then determine the next moves. Okay, and that is my view about Bitcoin here at the moment. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, check out the channel membership. Thanks a lot for watching. Bye-bye.